Good morning, everyone. How's everyone doing? Mary, Hugo?
Good morning, Dale.
Ryan, how are you?
Yeah, not too bad, mate.
Okay, good, buddy.
You?
So, can we see the charts here?
Yeah, got them.
Okay. So, a lot of strength in the dollar and pound really leading the way on the downside. And what a monster that yen is. What's your comments this morning, Ryan?
Bonkers.
Yeah.
It's gone into bonkers mode. I mean, I mentioned on the, we've been talking about it obviously all morning in the room. We've pretty much entered the danger territory now, where the officials start getting involved. It's okay moving a big figure a day and grinding around, but when it starts moving 2, 3, 4 big figures in a day, that's when they sit up. That gets it into the really volatile area that they don't like as officials. We've had a couple of commenters out, which I'm sure Kman will enlighten on. The Mr. Yen, who's pretty much may have drawn a line in the sand at 130. He said over 130, and that's when it really starts to cause problems. Whether that's taken up by
130.
130, yeah.
Oh, wow. Man. You got to be kidding me.
I thought 122 was going to be at least a
wait, I thought 120 was bad. Hey, by the way, good morning, Dale. I know you didn't sleep a whole lot. I can take over the charts from here as we have this discussion.
Okay.
So so Ryan, why are you saying 130? Give me a reason. I'm jumping in the conversation now.
Well, as I say, Kman knows more about this guy, Sakakibara, Bira, whatever his name is. He was one of the old hands, what they called a FX diplomat advisor, stroke government bod bloke. So what he says, a lot of the market pays attention to. And he came out first thing and said a weak yen is not a problem. That saw us rocket way up through 124 to sort of 124.50, 60. And then he said it'll only really start causing problems if it gets above 130, and that gave it another shot up to 125, and it's settled off then. We've had a few other officials and bods coming out as well saying, they're watching closely, etc., etc. So we're in the zone, I should think, or getting very close to the zone where the rhetoric steps up from the Ministry of Finance. We've got to remember that it's not the Bank of Japan, it's the Ministry of Finance who makes the decision. It's the BOJ who enacts it all, but it's the Ministry of Finance who says this is too much. Can you step in, please? And that's often forgotten by a lot of people. I think it's all down to the BOJ to make the decision. Obviously, they talk. So yeah, I think we're in the danger zone here. We'll see what happens over the next couple of days. We've still got the fiscal year end. We've still got month end, quarter end of everything else. If it does remain volatile, if we do start seeing it shooting back up through 125, 126, then we've got to be ready for some potential intervention, or who knows, emergency rate hikes, widening of the bands. You can guess all day long what they might do.
Yeah, they said last night that they would buy, and then actually, look, Kman just jumped in here, and I think he might have something to say about this yen. But the in the Bank of Japan buying unlimited JGBs too.
Yeah, twice. They came in twice. The first time they didn't get anything or very little, so they came back again, which is quite rare, quite unheard of. They ended up picking up 64.5 billion, I think, whatever that translates to, 500 and something million. But the rate we still saw the rate above 0.25 in the 10-year JGBs. So I don't know if someone saw Kuroda going home from his shift at the bank and decided to push the buttons. But yeah, they're going to be doing that for the next 3 days, apparently. So something else to keep an eye on. But
yeah,
they're fighting a battle.
Factor into the year-end move, though. Or I'm sorry, fiscal year-end move for them.
I don't think it does really. It's all part of ongoing policy. I think when we talk about the fiscal year end, we talk about firms, maybe repatriating funds and cleaning up the accounts and all that sort of thing. I think we're moved well past that now. We knew about the GPIF on the bid at 114.50. A few weeks ago, 2-3 weeks ago, that would have been related to fiscal year and stuff. But we're through that. This is more than fiscal year end stuff, although that is still in the mix. We've also heard and seen that Japanese retail traders are long yen to some of the highest positions they've been in for quite a while. So they're getting their nuts squeezed as well. It's all in the pot. There's so much going on in the pot. But what we got to focus on now is see what happens at month end, but keep an eye on this volatility. This is what will get the intervention coming and the potential moves coming. The thing I have to point out, from a price action perspective, we rally in the dollar yen or in any of the yen pairs. You can, point out whichever one you want. Yeah,
we're really just holding our gains. I mean, we haven't seen a complete reversal of anything yet. So I wouldn't, I noticed there's a few of the major yen pairs here that have reached some pretty key levels, but that doesn't necessarily mean anything. Key levels like 125, which I remember Kman last week talking about us testing 125, and here we are. Overnight we went to 125.10. Unless we see a complete reversal of the daily move and us close at the lows of the day, I wouldn't get too excited about any type of pullback you see here, because any type of pullback is being bought right now. So
yeah, I'm not interested in getting to proper shorts in these pairs until I've seen some multi-day highs, until I see a series of highs that say 2-3 days we can't go above this level. That's when I'll think, you're right, okay, perhaps we're starting to build a top. But you got to let the price action do that. You can't, people can't keep just thinking, oh, it's gone up another 100 pips, I'm going to sell it and have another go up another 100 pips, sell it and another go. I mean, yeah, we're into multi-year highs, but how many multi-year highs have we already broken on the way up? Through 115, 117, 118, 120, you name it, 122, 123. There's multi-year highs, and we've just carved them out.
Right. So let me give you guys a good example of what Ryan's saying here. If you take a look at some of the euro pairs and the euro crosses, I think this will give you a pretty good understanding of what he's saying. So, I've been looking at the euro Aussie. I'm paying a lot of attention to it because I played it as a bear flag, short around the 152 area. And here we are testing these lows, but notice how we're actually hitting lows, and we hit a new low actually, but we're holding. And if you go over to like the Euro Kiwi, we're not making a new low after this pennant. We're holding above the recent lows, well above the recent lows. So this is a good example of something that had moved so aggressively. Think about like this aggressive move lower in the euro following the whole Russia, Ukraine, situation, or invasion of Ukraine by Russia, right? That's what created these moves. But notice how we're finally starting to stall after a secondary move lower. I'm not saying that the yen is going to do something like this, but we could very easily see until we have some sort of topping pattern where you have the dollar yen, let's say 125, we get a pullback towards 122, and then we get a move back up towards 125 and another failure. That might be a good example of actually watching some price action to see if we're getting a significant reversal. Well, but as far as right now goes, it's not showing us that.
No, that if you go back to that Euro Kiwi chart, that's a perfect example of what you want to look for. Euro Aussie is a different ball game. So if you just can zoom in a bit. So we've had that move down from up near 163. Big move, carved through the levels. We've hit that point now down there where we are, and we've got a series of lows over a few days. What's that, a week, 6 days? That's the sort of price action you want to, when you hit a low and you can't break it.
Yep.
It doesn't mean it's going to go bounce all the way back up again. What it does, though, it gives you some confidence that this is a level.
Right, and this is where
level, you don't have to risk a huge amount against that level. 10, 20 pips under, you're wrong. So
and this is where you start establishing some sort of consolidation after a big move, and so now you have more of a range to trade in versus not knowing
exactly.
You have the unknown here, where you got let's just use an example of the Aussie yen. Like we're going, oh my gosh, well, where is this Aussie yen going to go? I mean,
look at Euro Aussie. That gives you another example. Here we had another pair following Euro Kiwi, but instead of holding the prior low, it's busted it.
Yeah, and maybe even a false breakdown, but we'll have to see how it plays out. Really interesting moves. I have to point this out, and I saw Kman pop in, so I'd love to hear what his thoughts on the yen are. He was, like I said, he was pointing out 125 last week. We tagged it overnight. Doesn't look like it's going to let off just yet, but I do have to point out, I want to go look at yields really fast, and let's just talk about the flattening of the, where in the hell did my, oh, there they are. Look at the 10-year, the rally in 10-year yields, right? And here's the 30-year, not quite moved as much, but notice the 10 years at 246, 30 years at 257. When do we invert?
I think it's the 530s have inverted potentially.
Yeah, I mean some of the 520s might have already, but I mean
530s.
Yeah,
good morning,
530s.
Hey, good morning, Kman. So the 530s have?
Yeah.
Wow.
The 20s are running a bit hotter than the 30s, so
it's still a bit messy though. It's not, it's not what you would call a full gone signal, but it's we saw this. I think late last year we saw, was it 5s, 10s, 5s, 20s going. Anyway, there was something where it inverted for about 5 minutes. So it's there or thereabouts.
So well, obviously yen, the dollar yen was at least overnight taking cues off the 10-year. So, Kman, good morning. You called this 125 level in the dollar yen. What do you make of this move overnight?
I wish I had taken the position when it was going so fast. I didn't want to pay up, and then in the end I couldn't pay up anymore. the thing is, for me, we're still trading the calendar. Okay. I think the importers and the Japanese whales who were buying in the 110s, 115s, whatever, they might be close to be done. But you can't rule out any of those other those followers. They're sued, like the Japanese insurers and other trust companies still having interest. But I think a lot of this kind of acceleration, because it happened twice now in the European time zone, I think it's momentum model funds who get triggers to buy. The higher it goes, the more they buy, and they will not sell before you get a reversal of something. So every day when they come in and they see the yen pairs higher, they will buy, because that's what their model says. They will buy. So, and I think in the process, we must have been done some barriers, some protection must have been done, so people have to pay up. It's like a self-fulfilling prophecy right now. But I would really point or put a point of caution here for the 31st, the last fixing in Japan. We tend to do tops, and then some of that demand, if it's still Japanese demand, is going to drop away, right? So yeah, you have to be very careful for the 31st during the European and American session, which comes after the Japanese last fixing of the month. Which
and I know if it doesn't drop away though.
Yeah, well, let's talk about this, because obviously.
What did you say, Ryan?
I said it's going to be fireworks if that demand doesn't drop away though.
Oh yeah. I know. I do think some of it might, and also with the speed of the moves, as Ryan already said, MOF has to say something about this. It's not BOJ who will decide to intervene. Let that be clear for everybody.
Yeah.
Kuroda has nothing to do with interventions, right? It is Suzuki at the MOF and probably some people pushing behind in the Japanese cabinet who will decide upon interventions. Is the MOF, not the BOJ. Huh?
Okay, so and actually Ryan was talking about that a little bit earlier as well. So let's keep an eye on the Ministry of Finance. So it's been a crazy move. Let me ask you this about. I know fiscal year ends at the on the 31st. We're talking about Thursday of this week. Everybody. I mean, we're not the only people that have been talking about it. I know you've been talking about fiscal year end really for the last week and a half or 2 weeks, really.
Yeah.
Maybe in the last month, but
we're really ahead of the game here, Blake.
We've been really talking about it because after the move has taken off, once we got through like the 118 level, that like when we started breaking here, we really started talking about it quite aggressively, because we were warning people like, look, this move is for real and it could continue to month end year end. But I've actually seen a lot of, I've read a couple pieces of analysis actually over the last couple of days. When I say days, not just this weekend, I'm talking the last few trading days. A lot of people talking about fiscal year end because of the move in Japan or in the yen. So is it possible? I mean, you think about this, everybody's talking about it, and now we got to a situation where it's not like I've been around in years past this time of year trading the yen, and then you get like a little couple day pop one direction or the other, going into year end. But this has been such a massive move that we've seen, really since, beginning of March.
Unprecedented.
It has been unprecedented. And you guys know
we're
the reasons
coming out
why.
of an unprecedented situation as well.
Yeah.
Right. But
what?
But there's so much attention on it. Is it possible we get people, you start seeing a reversal ahead of year end because you got so many people on this train right now? I mean, I'm just asking about your thoughts and possibility here.
The problem I think you've got is people late to the party who think that, this thing can't go down. And so now they start piling in, and it just happens to be running into the end of the month. And then they turn around and get spanked as the month turns. That's the beauty of being in our chat room. We were talking about this month and a half, 2 months ago. Be ready, be ready, get ready. So the fact that everyone's jumping on the bandwagon now, he's probably going to think it might be the end of the move, because once everyone's talking about it, that's usually when something finishes, right?
Speaking of which, James just said gold's moving, and you guys, well, most people know this, but one of the correlations I always try to pay attention to is a move in gold and then the yen. So when gold starts to pick up like this, sometimes the yen will start to reverse. We see the dollar yen back below 124, but gold's pressing higher. Just kind of a little heads up. And by the way, this is the kind of heads up that you get. I'm just using James as an example here. Dennis Gartman. I've been making fun of him because I'm like, is that Dennis Gartman? He's got a picture of him as the avatar. But the thing about our chat room is that this is where you start to see people are talking about what they're looking at. And I wasn't even looking at gold, and James like, hey, look at gold. I'm like, oh crap, look at gold. And then that's kind of the greatness. One of the many beautiful things about having a community like the one we work in. But anyway, sorry, Ryan, I didn't mean to step on you there.
No,
Can I add something? Well, my last thought, I've already said it, but I think the month of April is going to be monster important for the yen. Of course, we've seen these violent moves right now, and driven by different for different reasons, because there's not only the fiscal year end. Look at interest rate differentials, Bank of Japan capping the JGB yields, and there's still a lot of liquidity in the systems, so stocks or equities are holding up, which is also a bit yen negative. There's been many reasons, but I would really want to say be careful in the month of April. Usually in the month of April you have like fresh money to be invested in Japan, which from the third week of April might come into play. But the thing is, they have a negative current account running right now. I'm not sure whether there's going to be much money to be invested. So I think April, I'm not saying it will happen, because Ryan rightly pointed out, what if it doesn't come down? But I'm saying just be careful, because we might see a vacuum of demand and all of a sudden trade 4 or 5 big figures lower.
Yeah.
And you'll know where you heard it first.
I bought an option to the downside this morning for the end of April.
Same here.
So, all right. Well, thank you for pointing that out. And this is one of those, this is a great example of, I like to call I love to trade false breakdowns and false breakouts. They're like, in my opinion, they're the funnest trades. They're the trades where, you get people chasing the market one direction or the other. Like in the euro yen, great example here is that low that was created below support, crushed everybody on the long side, then turns around and just goes parabolic going the opposite direction. Even though I didn't trade the euro yen, actually, I don't know if I trade the euro yen much over the last week and a half. I was trading other yen stuff, but not the euro yen. But what's some amazing moves here, guys? One of the other things I want to point out really fast is I want to talk about the S&P and where we're at. The S&P is, these are the levels over the last 2 weeks I've been looking for to sell risk. We are at a 618 retracement at the 45.50 level. Big resistance over here that, comes in around the 4,600. Now, I want you guys to think about this from the S&P or from the market's perspective. We're above the 200-day moving average, but we're also, if we do carve out a high around here, when I say around here, it could be 45.50, 45.60, 45.70, maybe we just hit it this morning at 45.53. But let's say we create a lower high. We don't hit 4,600. We hit, 45.50, whatever. And we turn back down. Now you got a situation where we're really more or less range bound, which I think is going to be the case, where you have higher lows for the S&P, but lower highs for the S&P. And we have this consolidation over the course of this next, the next several months. I do believe that we're heading into summer months, and then the market's going to find real direction going into year end. And I think it's going to be really interesting to see how the market absorbs, higher rates as we get them across the board, and from global central banks all over the place. So anyway, hold on. Stelios is not going to be on F.A.C.E. Okay, he's just saying he's dealing with something. Sorry, I just was seeing some messages. But anyway, I'm thinking that with the S&P and with risk in general, because I have to point out where central banks are really removing liquidity globally, and we're going to see that with the Fed. What do you guys think about the projections of the Fed raising rates? Half a basis point in May, maybe let's just say another couple percentage points higher over the course of 2022. What do you guys think there as far as what the Fed's going to do?
This market getting all expectant again, isn't it? I think I saw a headline this morning that we're expecting 8 hikes, including the one just gone for the rest of the year. Well, there's only 6 meetings left, so how are they going to squeeze them in? It's going to need 50 pip hikes,
right?
But they're chasing the horse after it's bolted. I don't know what they're going to do. There's no way they're going to get inflation back in the bottle. They've been caught with their pants down, and all they're going to probably do is stymie the economy, and we'll see a slowdown coming, and probably technical recession, I would say, rather than a full-on structural recession. Let's see if they can deliver. If they can't deliver, then there's going to be some big market expectation changes.
In my opinion, they could do 50 in May. I don't see 50 yet, like Citibank is saying, 4 meetings in a row. I can't see that happening at all. They may do 50 in May because they have been preparing the markets for going more and more hawkish. To me, though, the most interesting, because the market has already anticipated all of that, right? So, me, the most interesting reaction to what's going to be in markets like equity markets or even the dollar is going to be when the Fed effectively starts QT, when they will take effective liquidity out of the market. What is going to be the reaction then? And in my opinion, that might be a bigger reaction than what we will be seeing on rates.
Yeah.
Good morning, guys.
Hey, Steve, how you doing?
Steve.
Good. Okay, listen, it's all about this conversation is in essence a confirmation that there is absolutely no faith in the central banks and the Fed in specific, since this is more of the conversations we've been having, credibility, right? It's all about that. The reason I'm saying that is the following. Given the fact that inflation is at 8%, and since we had the last reading, a lot of things have happened, none of which is deflationary, quite the opposite, right? We have every reason to believe that inflation is going to accelerate higher than the opposite. It's all about judging what they want to do. If they actually want to even make a low probability attempt of fighting inflation, hiking 50 basis points every meeting that there is ahead is the least thing they can do. And I'm not joking about it, right? There is no other incident in history that we've had inflation being where it is since the creation of central banks. The Fed was created in 1913, right? We have no other incidents in history ever that inflation gets out of control, rates stay at zero, we're doing quantitative easing, we're pretending that there's no problem, inflation reaches where it reaches, and then we're starting by saying, okay, let's see what happens if we hike a few times by 25 basis points. There is no incident in history where we managed to fight inflation having deeply negative real rates, right? So if the Fed, for some reason, be it political pressure or whatever, has decided that they actually need to fight inflation, not pretend that they're doing something to fight inflation, but actually fight inflation, hiking 50 basis points every meeting is the least they can do. The absolute least they can do.
But you're talking about credibility, right, Steve? Because let's backtrack like a year from. Let's go back a year. It was a year ago, and I think we were probably sitting on one of these F.A.C.E webinars, and you didn't believe that the Fed would ever raise rates, right? You're like, yes, it doesn't matter what inflation does; they'll never raise rates.
Yes.
So now they are. right?
Yes.
Okay. It's for credibility reasons, right? They have to.
Yes,
have
I
to
mean
raise
because they've gone way past the point that they can pretend it's not a problem. You know what I mean?
Right. So they are going to raise rates
Yes.
more aggressively from here.
Yes. No,
Okay.
I'm not sure about that. That's my question. I'm saying that hearing you guys have that debate, in essence, proves that none of you, and I'm on board with that, right, believes in their credibility. Because my point is that if we collectively believed in their credibility, there would be no discussion about it. We would be, of course, they have to raise 50 base points every meeting. You know what I mean?
Right. Yeah. Yeah.
That would be out of the question.
Right. Yeah. I
Right.
get what you're saying.
But
and
just the fact
you know,
that we're
because we
having-
still
Yeah.
know that the Fed is and the Fed is you can say it's politically biased, but it's really more it's there is a common belief, and I am a firm believer of this as well. That are like because I live in a wealthy area in the United States. I live in Scottsdale, Arizona. It's kind of like, you know, it's just it's a wealthy desert area where people have retirement homes, and you know, it just is what it is. You know, that's kind of just the place I live. And but consumer spending is very much driven by asset values, and the rich, the people that drive the Bugattis and you know, all the Salines and all the, you know, all the really cool cars and stuff here where I live, you know, they spend money based on where their stock portfolio is. The bottom
Yes.
line,
The
right?
wealth,
So there's
it's what they call the wealth effect.
it is
right?
a wealth effect, correct? And that is a real thing that the Fed, I think, really cues in on. And but it's, you know, because when you talk to the average American, whether or not they have money in the stock market or not, when you talk to the average American, they'll say, well, you know, the stock market's up, so things must be good, right? So it's not only the wealth effect, but it's also has a lot to do with perception and sentiment, because they know that sentiment's a bitch, and if it turns, it's hard. It's almost like the inflation genie that we have that's out of the bottle. Sentiment is also very similar to that. You know, when sentiment turns sour, it becomes nasty. By the way, Dale, do you have an interview today? I know you weren't feeling too well earlier, so you're on mute, Dale, if you are speaking.
I tried to recover it, but I don't see him.
Okay, yeah, all right. I know you weren't feeling well. Just so you guys know, Dale's he was a little under the weather here, so I didn't want to continue speaking if you had your interview here. Just let us know. Just interrupt us if not, and if so, we'll probably go on for another 5 or 10 minutes on these topics.
I'll let you know.
All right, Dale. Did Dale just meow at me?
Yeah, I heard him.
Wow.
I heard him.
Meow. Meow, Dale.
I'm more of a dog kind of guy.
Meow mix. All right. So anyway, going back to what we're talking about, I do think that you know, the Fed is, you know, when you talk about credibility, you're right, Steve. If the Fed is really fighting inflation, they're going to maintain their mandate of trying to, you know, bottle up inflation. They have to raise rates, but it's more than that, and we all know that, and that's why the debate is here, and that's why we are
exactly. No, I don't disagree with that. I'm just noticing that in essence, none of you, because you know that it definitely applies to me, really believes that they have one mandate and they're going to stick to it. Because any of you or any of us believed in that, there would be no debate issue, right? No debate topic. I mean, they've already done the huge mistake of initially pretending there is no inflation, following that pretending that yes, there is inflation, but don't worry about it, it's super transitory, it's going to go away in the glimpse of an eye. Then pretending that yes, you know, there is inflation, it is transitory, but it will take just a little bit more than we initially thought.
Yeah.
And then having to admit that, oh shit, yeah, there is inflation, it isn't that transitory, and probably we need to start thinking about doing something about it. But you know, that's the fun part, that the central banks were created supposedly, right, to be preemptive about such a hot issue as inflation, right? And we've seen the exact opposite happening, the exact opposite. So if they wanted, theoretically speaking, to rescue their credibility, they would have been like, listen, we did a very big mistake. We shouldn't have ignored all the signals out there and all the signs that inflation was coming and then think it's transitory. But now at least we recognize we did that mistake. We really need to do what we need to do, and we needed to jump ahead of it, in which case they would have to indeed keep raising rates like nobody's business. Why not 50 basis points and be doing quantitative tightening at the same time? The problem is, and here is where the interesting part of this year is coming, which we were talking about since the end of last year. This is the first time in recent history that the central bank is really tied, central banks are really tied in a corner. Because as you said, Blake, can they support the wealth effect and asset prices while at the same time fighting inflation? That is absolutely impossible, because doing one requires the exact opposite policies than doing the other. So it's one or the other. In any case, I think we're going to see a lot of volatility, and in my opinion, we haven't seen anything yet.
Yay! And that's why we're all traders, and this is like and so this is a perfect segue, Steve. Actually, it's not really a great segue, but I'm going to mention it anyway. Hey, if you guys haven't signed up for the free online conference that we have, the Traders Summit, here, I'm going to throw it in you guys have to attend. This is going to be great. Steve, who did you just get this weekend? It's going to be awesome.
Mark Minervini.
Okay.
We got a confirmation roughly 20 hours ago.
Yeah. So you guys, I'm going to put this in for everybody. It is free to attend. Just you guys can see the list of speakers that are I don't know if Steve and company have added all the people to the lineup, but there's somebody for everybody here in this list of very, very, very good speakers and presenters that we're bringing. It's free. If you want to attend live, get your reservation now, because I'll tell you how this works. We buy a license to do a presentation. There's only so many seats, because we just we can't afford just for free and not charging people to do like unlimited seating. We have to actually, because this comes out of our pocket, right? So if you're like, well, I can't be there, well, register anyway so you can get the recording. But if you can be there, you want to get registered now. And that's going to be important. So it's going to be a great event. It's going to be fun. I'm excited to get that out of the way, then my taxes out of the way, and then I'm going to go get a back massage.
How old is that picture of Steve?
What's that?
How old is that picture of Steve?
Yeah, this is Steve from back this is
15,
when he was 26 years old. Now he's 40.
No. Okay. Let's see how close you get to it. What year do you say, Ryan? What year do you say?
All right, let's let the listeners have a guess. How old do you reckon Steve is in that photo? I'm going to go 31.
I was going to say 32.
Wrong.
Go on, let's see if we get some guesses in there. 34 from Stephen.
Stephen is very close.
28 from Paul. I'll buy your 28s, Paul, all day long.
Yeah, 35 actually.
35.
So that picture is 6 years old, Steve?
Yeah.
You need a new picture, because obviously in 6 years you've gained like 42 pounds. So it's not fair. It's like me putting my high school picture up here. Come on, Steve.
Oh, come on. That's nowhere close to that.
I'm just kidding. All right.
FMH.com play,
What's that,
those
Neil?
dating services.
Right, that's right. This is Steve's Bumble picture. That's Bumble.
And then
by the way, I just
person.
learned about Bumble this last
What's
week.
that?
It's apparently, and this is my nephew's. My nephew's like, he's 26 years old and he's good looking, handsome man. But Bumble apparently is a woman friendly site where they have to choose you, versus, you like, it being more of a, everybody chooses. I don't know. I've never online dated, but yeah. So it's that Steve's Bumble.
Or so you claim.
Yeah, right.
Has he been for that massage yet?
Hey, just a little heads up. I want to actually just show you guys. Bitcoin is nearing the 200-day moving average. I actually bought Ethereum. Just kind of scalped it over the weekend. I got long around the 3,100 level. I sold it as we were at the 30. It was a real quick. I was at a soccer tournament all weekend for my kids, but or my son rather. I bought it right here, and as we hit the 38% retracement, I scalped in and out of it, and I was like, oh, we're gonna probably see some resistance up here. But yeah, these cryptos continue to blast higher. But knowing that equities like the S&P is kind of turning this morning, and I'm not saying that risk is going to turn sour from here, but you do have to be cognizant that this is the 618 retracement, big fib level of the high, all-time high in the S&P to the lows in February. We are at the 618 retracement, and we are struggling around these levels. And like I said, with rates doing what they're doing, you do have to be a little bit careful here. Hey guys, any last minute ideas and thoughts before we roll out for the day? I know Dale isn't feeling well. He's probably going to reschedule his guest. I know Steve, you got a real special guest coming in at the
Friday.
end of the week, right?
Yep.
Absolutely. And to be frank, we got to spend even more time during the weekend, and I think I got even more stories that I think he's going to be talking about. I mean, I'm going to be getting him to talk about. So yeah, he's a very interesting guy. I'm not even sure. I'm actually pretty sure that half an hour is not going to be enough. We're going to have with us Lars Rasmussen. He was lead developer and then high-end manager, etc. for Google. He's a co-founder of Google Maps. Then he went to Facebook, worked with Zuckerberg and couple more companies, and now he is mostly a venture capitalist, capital investor, an angel investor, and consultant for tech startups.
Awesome. Well, it's going to be a really cool interview. It's probably somebody that's we're not used to hearing interviews like this, and he's probably not used to doing interviews like this either. So it'll be really interesting. All right, Dale, I hope you feel better.
By the way, it's not going to be detached from what we do here, because other than being a cool guy with a cool story, he has a very inside knowledge of what is happening in the current market environment with funding and risk appetite having to do with all these companies that have been driven higher, pre-IPO companies that had been in essence draining a lot of capital, and how the situation has shifted during the past few months with it. So from a financial perspective, it's also going to be a very interesting insight.
All right, great. All right, well, Steve, we look forward to it on Friday. Guys, don't forget, make sure you sign up for the Traders Summit event. It's going to be a huge event, great speakers. It's free, but get your seat, especially if those of you that are thinking I'm gonna be there live. Go ahead and register right now. And then make sure you guys check out our trader funding program when you get an opportunity. Go watch the 2-minute video at the very bottom of the of that page. Everyone, we'll see you tomorrow. And it should be pretty exciting for everybody that's a ForexAnalytix subscriber. We'll see you in 35 minutes on the Morning Edge webinar. All right, guys. Have a great one. Dale, I hope you feel better.
Thank you, buddy.
All right. Thanks, Kman.
All the best.
Ryan, Steve.
Bye-bye all.
Don't just count your pips, count your blessings, everybody. And that means being able to get a full night's sleep. That's really a blessing.
Yeah, I know, Dale, you were lacking that last night. So
I'm sending
Party
a
animal,
text
you-
to
you-
Steve. Anyway,
Party animal.
all right, guys. Well, great job, team, and nice call on S&Ps, Blake. They're coming off, and you know, what a great team. You know, when I'm off, you step in. Even when I'm on, you step in. So, you know, I think we have the best team on the net, and they're in the chat room like all the time. You want good trading ideas? You want to pass the assessment? Look no further. And have a great day. We'll see you for Turnaround Tuesday. Okay, we're gonna have a nice interview. Who do we have tomorrow? It's a good week.
And there are the Will Smith memes.
But
that
yeah,
have started.
I mean, hey, I have to
Oh.
say something. I told my wife I didn't think that was real. I mean, his words were real, but I think that's all staged. That's just me, you know,
yeah,
because
it's Hollywood, man.
it's Hollywood, and look, the awards, no one's watching them anymore. They had to stir
Yeah.
up some controversy, and I'm telling you, I think it's staged. But that's just me. All right.
Well,
Anyway.
I agree with you, Blake. You
All
know.
right.
Anyway,
All
so
right.
listen, guys, good hunting today, and go to the website and check out the pips. So you have some guidelines of what the guys are thinking, and go over all the important research, and you're going to have plenty of ideas. So have a great day, everyone. Thanks for covering for me today, guys.
All right.
Adios.
See you.
Bye-bye all.